The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 16th. No, it's April 17th. What am I talking about? The April 17th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day. So let's start out our day with some empowering thoughts on nothing other than love. You know, I love doing this, love being here with you. And staggering amounts, if you think about it, staggering amounts of manpower and money are devoted each year to discovering, understanding, and harnessing the forces of nature. However, the greatest force on earth is love. The real wealth of nations does not come from mineral resources, but from what lies in the minds and hearts of its people. From you and I out there, we can harness this force of love if we listen to our hearts and our minds. This, folks, this is the law of life that will lead to an extraordinary existence. And I love being here with you each and every day. Let's go get these markets kicked off here right now. We've got the Dow off 124 points, S&P trading at 1558. That's down 16. NASDAQ off 39 points, trading at 32.24. The Russell off. The Russell really kind of the leader here in the clubhouse. Well, really the NDX 100 is down 1 3/10%. Just behind that is the Russell 2000 off 1 2/10%. You've got the, let's see, what else we have? We've got gold. Looks like it's up about $6, trading at $13.93. Silver trading at $23.67. King dollar on the move, up 50 ticks. You've got the euro down 112 ticks. Our calling number is 877-927-6648. Let's begin the day as we do during this hour here, taking a look at the indexes. Now, what I've got up on my screen here right now happens to be the transports. Often we overlook the transports out here, but the transports, we want to pay attention to this because we've got a couple of bullish reversal candles that the transports are going to try to take out. They are trading into, and what you're always looking for pieces of information. What the transports did on April 5th was they created one of our hammer candles. We love that hammer candle because it tells us a lot about where the bulls and the bears are hanging out. The low there is 58.78.12. Right now trading at 59.63.98. We know that we've got volume off of the top, wide price spread. We had it all on Monday. You had a little bit of a bounce back yesterday. It was on light volume. So on the transports, we also have a hammer candle that has that low of 58.78. We've got this Morningstar reversal candle back on February 26th, that low 57.89. That is the level where at 57.89 it'll be like going to Niagara Falls, if you can picture it. And I suppose being in the barrel, you know, there are some folks that have gone over the falls in a barrel out there. Can you believe that? That's having a little bit of fortitude. And in this case here, it would be like looking over the falls, and that price point is going to be 57.89.20. That's that February 26th level, because once you get below there, once you close below there, there is nothing to stop price other than hitting the floor, and that floor will take you all the way back to November 16th. Yes, you'll see a little bit of a stop at that January 2nd, December 31st level, but no real floor that was built there, and that would set off a cascade all the way down to November the 16th. That is on the transports. Let's go take a look at the S&P 500. Well, we know yesterday the bounce was expected. The bounce was expected because we went ahead, we did our analysis. We took a look at all of the VIX percentage increases that were above 20%, and we looked at most of them. Yesterday was the third highest percentage increase in the VIX move to the upside in a one-day time period. It was 43% out there. We know just simply by taking a look at it that was to be expected, a bounce. You know what else was to be expected? A 0.618 bounce, and that is in essence what we saw out there in the marketplace in celebrating the summation index from Leonardo da Pisa Fibonacci. Right now, what's going to be interesting, you're taking a look at the S&P 500, looking at three different lines out here. The blue line, the diagonal lines, that is the price channel. price channels being created by identifying the most number of co-located opens or closes. Doesn't matter whether it's an open or a close. You can see price now breaking back below that level and running into its last area of diagonal resistance. That would be the trend line coming off of November the 16th out here. Now, you see a couple of black horizontal lines. There's a lot of lines on the chart, but I'll describe them to you. If you are listening on the radio or listening at tfnn.mobi, remember, this show will stream live to your mobile device, your smartphone, if it's a smartphone, by going to the homepage of tfnn.com. On the right-hand side, click on that button that's got those three smartphones. This show will stream live as well. The show is on Channel 10 on Tiger TV, archived on Channel 10. 1576.09, we all know that was the October 11, 2007 swing point high. That area has been rejected. We got over it with light volume, came back inside it on heavy volume off of the top. Really didn't expect to see that one, but that's what we saw. That says false breakout to the upside. 1546.72, that really is the last bastion of hope out there. Of course, we'll call support being, since we're so close to 1546.72, and by the way, 1546.72, that would be getting below the October 11, 2007 swing point. Of course, what we do know is when you trade inside a swing point until you've cracked it really on both sides, you can go back up and you can test those highs. And really, if that's in fact what happens, I can actually build a case to expect that. No reason to not expect that. We are so close to sell in May. We've got big signals out here that that's what the market is going to do, especially after those nice increases, quite frankly, off of the December 31st, January 2nd move up inside the market. So 1546.72, that is an area to be paying attention to inside the S&P. You've now what I would say is 1539.50. That happens to be the low of April the 5th out there, but there's not a lot of friends, not a lot of bullish friends out there at that level. So I expect that if we get it close below 1546.72, it's only a matter of time before the S&P moves down to the February 26th level. That's 1485, and then all the way back down into the December 31st breakout, January 2nd breakout inside the S&P 500. Let's go take a look at the Russell 2000. The Russell 2000 is off about, where is the Russell here? The Russell on my screen is off 40. No, that's the NASDAQ. Russell 2000 down 11.5 points here this morning. The Russell 2000 truly is a weak link in the chain out here. Let's pull this back. In fact, what we want to take a look at on the Russell out here is all the way back. Where is this likely to head to? And it's likely to head to, you've got the swing point out here, the all-important swing point, or an important swing point of September 14th. Now, what's also important about that area, I'm going to draw a black line across my screen out here. This is, so it's a daily that we're looking at. This is the, also happens to be the swing point that took you back into May 2nd, 2011. So that high out there, if you're watching on Tiger TV, that high is 868.57. Now on September 14th, as the market made a significant high in the marketplace, what the Russell was doing, it was testing that May 2nd level. Again, that number on May 2nd, 2011, 868.57. What the Russell was doing on September 14th, it got up to 868.50. Tested that area, moved down below it, and we had a breakout. So the Russell broke out on January 2nd. So on the breakout inside the markets, January 2nd, which had wide price spread, was a breakout above that level. So where we would expect the Russell to actually move back down to is the September 14th level. September 14th high, again, is 8. Let me make sure I'm on the right here, September 14th, 868.50, and that takes you right back into, as I pull this in closer now, you can see it takes you right back into that January 2nd high. Now, if the Russell 2000 gets back below January 2nd, just like it broke through and moved top, so just like the S&P now I'm talking, just like the S&P broke the October 11, 2007 swing point, this would get the Russell 2000 back inside the lower part of its range, and if it does that, you can forget about the test of December 31st. What the Russell will do is move all the way down to that November 16th level out there. So that's on the Russell 2000. Let's go take a look at the NDX. We've got Apple, at least Apple. Let me go see what Apple is doing here right now. Apple down $18. Okay, so now let's go take a look at the NDX. Apple breaking its most recent swing point. It's on its way down to the $400 area, I believe lower than that, but we'll go take a look at that stock chart in a moment. Now, it's the NDX that also is an important stock chart for us to be paying attention to. Why? Well, the reason is because it's got a pretty decent area of tested support. We'll switch over to the Qs here after we look at the NDX 100, and that level is that January 2nd gap up area. That's the red line. Let me get rid of a couple lines on my screen here. That way you're not looking at too much saying, Steve, which red line are you taking a look at? So as we take a look at the NDX, we've got the tale of two patterns here. Now, the NDX 100 have been traveling in a sideways 0.786 Gartley sell pattern ever since the time frame of March the 5th out here. So it went from March the 5th all the way into the breakout session last Wednesday on April the 10th, where it made a 100% move of a move. And what I mean by that is it just simply got back to the starting swing point where we saw a significant change in trend. In the case of the NDX, it was September 21st, 2012. Which was not the September 14th date as we were looking at on the previous chart for the Russell 2000. We would look at September 14th as a swing point on the S&P. And the NDX, it had a mind of its own. It was September the 21st level. Now, there was a gap down, and that gap down has held as a resistance. And the reason why I say a tale of two dogs out here, or two stories, is simply because oftentimes when you break a 0.786 Gartley pattern, in this case here was a sell pattern, and in fact that's exactly what happened, then what you see is that turn into a butterfly pattern. So right now, the NDX is weak out here, but what the NDX really has to do, it's first got the first level of support that it's going to run into, which is going to be your March 4th to March 5th gap up. That's only been tested once out here. The next area of support is going to be that January 2nd level. That price point is 27.23.67 out here. But let's go take a look at the ETF itself. Let's go see what the Qs here are doing. Let's get rid of the SPY chart. Let's put up the Qs. Now, what is interesting to me is on Monday when we had a volume off of the highs in the New York Stock Exchange, in the S&P, the SPYs, in the Dow, in the Diamonds, in the Russell 2000, we did not see that inside the Qs. Inside the Qs, the volume down on Monday, on April the 15th, was 48 million shares. That 48 million shares after going up with 55 million shares on April the 10th out here. What you are looking at inside the Qs, you're looking at a rising price channel. That's coming in off of the November 16th area. Again, along the tops and the bottoms, I'm using co-located opens and closes out here. Now you can see the Qs are outside of that price channel. Last time it was outside of that price channel was all the way back here on April the 5th. 55 million shares down there. So far today, it's done 10 million shares in 45 minutes of trading. Just simple math says it's got the volume to go ahead and penetrate that area. The top of April 5th is $67.96. The low there, $67.35. Now, forget the rising price channel where you've got significant support inside the Qs. Again, it's going to be that January 2nd level. You can see how that thing has been tested many, many times. So the real volume benchmark on the Qs is going to be 70 million shares. That's January 2nd. Today's volume will give you a real good indication. You get more than 70 million shares, and the Qs are headed to test out that January 2nd level one more time. 877-927-6648. Dow's off 134.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 126 right now. S&P off 18. Composite off 50 points. Obviously, Apple here being a big component. It's off over $20 right now. It's breaking a swing point. It's doing it with volume. Apple on its way to $395. That's the one-to-one. It's really on its way to lower price. We'll go take a look at that in a moment. The swing point it's breaking is the March 4th level. That was a low of 419, 20 million shares, 20.7 million shares to be exact. So far, in less than an hour of trading, it's done 9 million shares. And on the 10-minute bars out here, we put the 10-minute bar, what you will see here inside Apple is you will see that volume is picking up to the downside here. So it's not like it was one sell. That's a 10-minute chart we were looking at. Back to the daily chart here on Apple. And, I don't so when I take a look at Apple, we're taking a look at a large, in my opinion, larger than a 1-to-1 A to B equals CD down. It's got more than a 40% chance of doing that, in my opinion. 341 is your 1 to 1.272. A to B equals CD down. In the case of Apple out here, if you go back and you actually, so I think Apple was certainly fairly valued when Steve Jobs was still alive. Not that Apple didn't have a lot of value after his passing. It most certainly did. Stock moved from 380 all the way up into 701-ish and change. But certainly if you take a look at a company and its value, I think that that's really where Apple is headed to, is where it was valued when he was alive. That happens to be October the 4th, October the 5th, when he passed away. If you take a look at the stock price, what it was traveling at, about $354. So $354, maybe up to $381-ish. To me, that is, so you're looking anywhere between $354 to $395 would be my target for Apple. I believe I caught one of Larry's shows. He was talking about a possible 3 drive to a bottom pattern out here. If we take a look, I think he was, so maybe if I misquoted him, my apology here. I should really pay more attention. But if he was looking at most likely the swing point here from January 25th, and I'm sure he'll actually bring it up on his show today because it is Wonderful Wednesday. But if we take a look at that possible pattern out here, you'd be looking at the swing point from January 25th, that low 435. That would be your first drive. Your second, I didn't mean to grab that tool. Your second drive is actually down here at the swing point that is breaking today at March the 4th out at 419. So if we take a look at that, that was I think that was a 1.272 expansion. Oh, you know what I need to do? I need to move my chart just a bit here. I got to scrunch it. I got to do that scrunchy thing, which I believe somebody sent me something that said that scrunch was actually a word out there. So I'm going to have to scrunch my chart here in order to be able to draw that pattern, which would take you into about that 395. That's your 1-to-1 A to B equals CD. Swing point here, you can see it was a little bit more than a 1 to 1.272 on that first drive. Now, here's when you're making volume is going to be key. When you're coming into any pattern, it doesn't matter to me what that pattern it is that you are trading, whether you're using stochastics, whether you're using MACD, whether you're using A to B equals CD, whether you're using 0.618, whether you're using Bollinger Bands, you name it. Whatever it is that you might use out there, and they're all great systems if you've got one that works for you. What you have to be very careful of, very cognizant of, is when the pattern is completing, what type of candle is coming into that level. What kind of candle and what kind of volume out there. Because when you're completing the pattern and on a buy or a sell pattern out here, what you want to see is you don't want to see a wide-ranging candle. You don't want to see a candle with volume, because that is giving you an idea that the move higher or lower, depending in this case here, we're taking a look at Apple, which would be lower, is not over out there. In this case here right now, with 10 million shares being traded in the first hour of trading out here, right now it's coming in a bit hot. And I say a bit hot just simply by taking a look at the last swing point here that it is passing, which was March 4th, which only had 20 million shares out there. It has volume, just to give you an idea. The largest volume day that we saw in Apple recently, I'm not sure what happened on this trading session right here. If this was March 29th, might have been the S&P rebalance out here. But let's just take a look at the gap down on January the 24th that had 52 million shares. Right now, at today's rate, it's accelerating beyond that volume altogether. And if we go back to the left-hand side of the chart, I don't see any high volume bar that this thing is moving up into at all out here. So be careful on Apple. I think that it has much lower to run than the 390 area, but that's just my opinion. Right now we've got the Dow off 113, S&P's off 17, Google off $6 and change. To the upside, Atlas Energy. That's interesting. Atlas has the market on its shoulders of 15%. Let's go look at that stock chart when we come back. We'll be right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 130 points right now. Now, perhaps the most interesting article that I read this morning, it was a article on Bloomberg, put out by Bloomberg. I'm sure others, I don't know if they actually were the ones that picked it up. It says this: Cyprus finance ministers see gold sale within the next few months out here. If you remember on Monday when I came on, we were taking a look at gold as it was crashing down. What I was saying is that there were folks out here, you watch folks in the media talking about that, it was because Cyprus was selling gold. I always said, be a fact checker, don't necessarily believe what it is that you hear. Now, I had done the work on it ahead of time, just simply by doing some research. It wasn't that difficult to do. As I mentioned, only it had taken me a couple of about half an hour or so. So the article says the Cypriot government plans to sell part of its gold reserves. That means, folks, it hasn't sold any. Within the next few months, a decision needs to be approved by the country's central bank. I won't pronounce his name. The exact details of it will be formulated in due course, primarily by the board of the central bank out here. It goes on to say that as far as the total gold holdings, let me see here if I can quote it exactly. Yes. 13.9 tons, according to the World Gold Council. Well, it's the World Gold Council where I got the information from to begin with as well. In fact, you can go sign up and you can become a member of the World Gold Council. There's no cost to do it, and you'll be able to access all kinds of information on the metals out there. Now, you might ask yourself, what is 13 tons of gold? Well, it's pretty simple. It's about 420,000 troy ounces of gold. That means, folks, in the scheme of things here, where they're trying to raise, $10 billion, something like that, it's only $600 million. It's only about $600 million in dollars out there that the Cypriots could even raise from gold. So they got some big problems over there for sure. So I was glad to actually see somebody else pick up on this. So they haven't even sold anything out there, so there are bigger problems inside the gold market. Let's go back. I mentioned beforehand that Atlas Energy Corp has the world on its shoulders right now. It is the leader in the clubhouse to the upside, up 15% up 6.82. That's on an announcement of a pipeline acquisition of Eagle Ford Midstream out here. That is on Atlas Pipe to buy Teak Midstream for $1 billion out there. And we take a look at the stock chart. I've got the weekly chart up here on the screen. Now, on a weekly chart, earlier, before we went to break, I was talking about how important coming into an area of resistance or support was. I was talking about, different patterns, whether they're the lightning bolt, the A to B equals CD, whether it's using Fibonacci's, whether it's using expansions, whatever it is you might be using, Bollinger, but you name it out here. Swing points is another area. I didn't say swing points. Well, swing points is a key here. Well, if we take a look at the swing point on the weekly chart, May 4th, the ticker symbol here is ATLS. You can see the swing point high happens to be May of 2012, May 4th. The week of May 4th, that high, 39.35. Volume out there was 1 million shares, a little over 1 million shares. You can see coming into it here the week of February 22nd, 2013, 998,000 shares. That was 998 going into a million. It's the next week that's key. What does it do? The week of March 1st, it gaps up above it. Well, that's important. Now, those gaps, which you always want to also do on a gap. This is what I do on gaps. This is why I think gaps are so very important here. Because oftentimes now they're places where you don't have any filled trades clearly. But just go ahead and take a gap and paint it in with your eyes. Go ahead and paint it in and extend the bar. Because understanding the power of the bar, understanding the power of the gap really helps something. So when you're taking out a swing point, when you're taking out a level, you do it with volume, you do it with a gap. It's giving you some big information out there. In this case, Atlas did that. It moved up above the swing point, did it with volume, did it with a gap. Big signal out there. Now, if you just take a look at the weekly chart, where is this likely headed to? If you just take a look at the A to B equals CD, this would be coming off of the lows here back in March of 09. That would be my A point. My B point on this chart here would be the highs back in April of 2011, April 29th. And then your C point, which here you can see your C point is less than a point, it's less, let's go see what it is actually. It's a .382 swing point. 1721 would have been the exact number. It closed at about 1740 and got down to a low of 1582 out there. Less than a .382 or a .382 swing point out. A .382 retracement. I'll get it out of my mouth here. And that says you do more than a 1-to-1 A to B equals CD. You can just take that, translate that into the chart that we looked at inside Apple. Now, the difference here on the weekly chart is if you take a look at price on that C to D leg out here, folks, take a look. This is on the inside portion, whereas Apple is on the outside portion here. So the 1 to 1.272, it surpassed that here today. This is headed to about 58.92 as its potential next stop. That would be your 1.618 retracement. Let's go to Franz in Boynton Beach, Florida. Franz, thanks for calling. Thanks for holding. Did I get the name right? That's the key.
Yes, Franz.
Franz, that's perfect. I'm doing great. How about yourself?
I'm doing excellent, thank you. I'm not sure if you covered light sweet crude already, but I just wanted your perspective on it.
Are you in light sweet crude, looking to get in? Are you long, short? Tell me what you're doing and how I can help.
Looking to get in now.
Looking to get in, looking to buy. So as I take a look, are you watching us on Tiger TV, Franz?
Yes, I am.
Okay, so as we take a look at light sweet crude, the first chart I've got up on my screen that is important to be paying attention to is the weekly chart. Now, the weekly chart, this goes all the way back to the highs back in 2008 when we had light sweet crude had traded up to 147.27. And the red diagonal lines that you're looking at are a descending price channel. And what you can see here is that the tops of this descending price channel have really kept light sweet crude in place, in checkout here. I think right now you've got light sweet crude trading inside that November 9th swing point. The low of that is 84.05. The high of that is 89.22. You're inside there. The first area where this is going to test is going to be that $84 level. I suspect that what you will see is you will see light sweet crude move down into about the $77 and change range. So this is the weekly chart. Let's go switch over to a daily chart out here. On a daily chart, we're taking a look at an A to B equals CD down. This is a smaller A to B equals CD down. This is coming off of the swing point from September 14th. That's your A point, which is out at 100.42. Your B point is down on November 7th at 84.05. The C point was made back here in February. That gives you a price projection of 81.76 to 77.33. I really think your next decision on maybe trying to take a short-term trade on light sweet crude is more likely in the range of about $78, $77, somewhere in there. And what you want to do is you want to wait until you see some type of bullish candle formation. And to give you an idea, Franz, of what that might look like, if we take a look at light sweet crude, as it came down here into the March 4th time frame, made a low of $90.71. It was also making a Gartley buy pattern. I'll go ahead and draw that in here on Tiger TV. It was a 0.618 Gartley buy pattern. Now, it came in on that day there on March the 4th, that was not the day to actually go ahead and buy because you didn't have any bulls here. The first actual bulls showed up on that very next trading session, March the 5th. You had a little bullish engulfing candle. That was a signal that if you wanted to tiptoe in, you could. You got another bullish or bull sash candle on March the 7th, and that's really what it is that you want to see. If you take a look at yesterday's candle out here, really nothing more than a pause button in my opinion, and so this says that light sweet crude wants to trade lower. And what that's all about is the U.S. dollar index that wants to trade higher. So I say just be patient on light sweet crude, okay?
Thank you. So you're talking about another 10 points from here.
Yeah, I think it is. The only thing now, the first real test for you is going to come down when it gets into the 84.05-ish range, which is the November lows out here. And, volume out there is about 303,000 contracts. Yesterday was down with about 362. It's coming in there too hot, 325 on the prior session. So it's really coming into that level pretty hot. So I say at least the minimum is going to be in the $84 and change range. But I think this is just simply the way that this is trading. It wants to get down to 77-ish.
All right. Thank you, and have a good day.
Oh, my pleasure, and you too, and thanks so much for calling. Right now we've got the Dow is off 153, S&P is off 22 points out here. I did have a request earlier, so let's go do that and take a look at that chart here. We'll switch over, and this was on a equity VECO. VECO is the ticker symbol. The Tiger listening was paying attention. We were watching this equity here gap up on the March 25th, gapped up with 4.2 million shares out there. And at 4.2 million shares, where I was really, I'd like to go back and listen to the replay here. Well, we were taking a look at VECO. If you're watching this on Tiger TV, if not, I'll describe it to you. We're looking at a sideways consolidation range. That sideways consolidation range really being established going all the way back to August of 2011, right around the highs of, we're going to call it $40 out here. So I've got a black line going across my screen. Now, up at the top here, the next time that this equity moved back up into that level, into that 40-ish range, it got up to 37.87, which was on May 11, 2012. Sell in May-ish kind of thing, right? So it gets up there, 37.87, does it with 1.4 million shares. The next time we see it up at that level, and it holds, is at around 38.35, 655,000 shares. And then the next time that it gets up there, 630,000 shares, September 14th. We know that is a key day in the the marketplace. So this thing kind of trading with regard to key days, let's say in the S&P 500. I don't know if the VICO is in the S&P 500, but what we can see, that black horizontal line is a strong area, very strong area of resistance. Now I'm going to go ahead and draw this line on the bottom of the screen. We'll go ahead and put that in black as well out here. And so you can see it was coming into that high really hot with nice volume. Now, from a trade standpoint, coming in with that type of volume on the 26th here of March, and when I say that type of volume, 4.2 million shares, it should have been able to have broken out of that consolidation. And this was a consolidation running from, we're going to call it $40 down to $25. So you had a 15-point consolidation. Maybe it's a 14-point consolidation. Maybe it's more like 26. We'll call it 26. So you have a 14-point consolidation. The buy on this would have been breaking the consolidation. What it is doing is coming back to where this thing last broke out. But that's why you want to take a look at a stock chart. You want to take a look at, is there a personality in the stock chart? And I think there is, because if we take a look at the last time that this thing broke out with volume during this consolidation period was May 1st, 2012. And it broke out with 6 million shares. And then price went ahead and moved up to the top of that level, the top of that horizontal resistance, the top of the consolidation level, and then take a look. Price ended up moving all the way back down to the bottom. It took a while. It took till November 15th of 2012. Now what you have done is you have actually closed the gap today. If this would have at least tested the gap, which means the prior session, which was March 22nd, remember this thing moved up, this gapped up with 4.2 million shares on the 25th. Right now it's closed that window. That's no longer support. This actually says, okay, it's going to go ahead and pull back all the way down to February 26th. Well, folks, if it can make it down to February 26th, might as well go down into the $25 level. So consolidations are really beautiful things, really beautiful patterns out here, and you want to be paying attention of when an equity breaks through that, or commodity or an index or anything breaks through a consolidation area, because your measured move is really the size of that consolidation. We take a look at that in bonds. Let's go over to bonds here. Bonds right now are trading out at 148.05. Bonds have 149 written all over them. Bonds were in a much smaller consolidation range. Bonds had only been traveling in the consolidation range since January the 2nd. You're taking a look at a yellow box here on the left-hand side of my screen. All that is just the consolidation range and a price projection here, and that's based on the consolidation level that it was traveling in back on February the 4th out here. Now, what bonds have also done, is these things have broken out. They've got some conviction behind the move. And actually, what we're taking a look at here, let's take a look at the retracement level of we're really looking at that B to C leg. If you take a look at that retracement, it is less than 0.382. So bonds have made a retracement, an A to B leg, which is off of the lows here from March 8th, down at the 140.14 level, all the way up to the high that was established here on April the 5th. Only doing a 0.382 retracement and having broken through a consolidation level that had a price target of 149, this actually says you're more looking like 153, but when you only do a 0.382 retracement, you don't do a 1-to-1. You're just like taking a rubber band and wrapping it around your finger, coiling it as much as you can, and only backing it off 38%. Let that rubber band go. How much energy do you have there? You've got a bunch of energy. In fact, way more energy than if you only backed it off 61%. This says bonds actually want to make a move to the 155 level out here. That's the way that it's trading today. That's the consolidation range. That's how you want to play it no matter what time frames it is that you are trading. Now we'll go back to the ES Mini. It's made the initial price projection here, which was down at 1545, which was the 0.786 retracement off of the lows that came in on Wednesday all the way up to the high that was put in at 4 o'clock yesterday afternoon. Still no bulls in place, but you are taking a look at the ES Mini being in oversold territory. The bulls will come in at some point in time during the day. Whether they'll get trampled or not, I'm not sure, but there are no bulls that have shown up for work just yet. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 153. Let's go peek in here on the currency pairs. You've got the Queen. The euro is trading out at 1.3038 right now. It is making a 100% move on the 30-minute chart. We've got the 30-minute chart up on the screen here. You can see it's truly getting into a condition of being oversold here. It gave you a really nice signal right here at 3 p.m. yesterday to go ahead and take the short side, set up some nice divergence with regard to relative strength, as well as a bearish and engulfing candle that was confirmed, getting that nice second opinion coming in at the, I said 3 o'clock, I really meant, 3 o'clock and then 3:30. So right now, making a 100% move of a move in oversold territory. No bulls here in place just yet, but I expect that they should arrive. Super Mario should arrive here, and that will go ahead and probably stop the descent here inside the U.S. markets. Everything on an intraday basis getting into that oversold condition. It can continue on for hours. You won't know when that's going to end until you actually see some bullish candles form out here. But the markets don't go straight up. They don't go straight down, and it just depends. You can go and take a look at intraday charts to get an idea of where things are going. If we take a look at the euro on the longer-term picture on the daily chart, really looked like the euro here was attempting to truly break out yesterday. That's why I went down into the 30-minute chart to really see what was going on. The euro getting up above the resistance line, this consolidation level. It had been consolidating, in essence, going all the way back into the time frame of September 2012. I believe that was Super Mario Day when he said he would save the world out there. And what we saw was a consolidation from that September time frame all the way, it broke out of a consolidation, and you can see it was a small consolidation here. Went from that September 7th area down all the way until there was a real breakout of it right back here on January the 10th. As I mentioned, when you break a consolidation level, your price projection can be the extent of that consolidation. You can see the yellow box right down here. When we did see a clear break of that level, I'll just move this box over here so you can see how this actually works. I put it in here, and you can take a look at where price actually moved to inside the euro. So use this as a extremely powerful tool. This is great, especially for those of you that are just new to technical analysis, because identifying horizontal trading ranges is a very visual and a relatively easy thing to do. You don't have to understand A points, B points, C, D, swings. All you have to do is just take a look at where you see a congestion of where the equity is trading into, and it works really, really well. Now, when you get a break of a consolidation area, what I really should tell you is that the minimum move should be the same move as it was consolidating in. And that's when we took a look at bonds and we took a look at other patterns out there, such as that A to B equals CD pattern that says bonds want much, much higher price. Right now, the break here yesterday on the euro, that is proven to be a false break. Of course, it was the 30-minute chart that would have helped you with that from a trading standpoint, just understanding divergent patterns out here and the mere fact of candlesticks. So you want to go ahead and make sure you've got those in your trading arsenal. So as far as the day, we've got earnings after the bell here. I believe we've got American Express, eBay, Select Comfort, SanDisk. They'll be out with earnings after the bell. We've got Bank of America was out beforehand, Mattel earlier. Stay tuned today, folks. Basil Chapman is up next. It is Wonderful Wednesday. Following Basil, our man, Larry Pesavento. After that, we go to Daryl Martin, then David White, and the Tom O'Brien Show from 4 to 6. If you're off to start your Wednesday, have a wonderful Wednesday, folks. And always remember, you have an amazing power within yourself. And that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Wednesday. Look forward to seeing you in the morning. Take care, folks.